the webinar. Please, I know you can't unmute your mic, but people can use the chat room to confirm they can hear me properly. Please, I need a confirmation from participants that I'm audible and you can hear me properly. Okay.
Yes, you're audible.
Okay. Thank you, everyone. Um, According to the agenda, the webinar is meant to last approximately 2 hours. We are still welcoming participants. We will commence shortly with an open prayer, but prior to that, let me quickly run us through the agenda for the day. We'll have an opening prayer, followed by ICAN anthem and the national anthem. Then I'll do a brief introduction of what the webinar is all about. It's basically on Nigerian tax reforms, and we have two presenters. The order of the presentation today is to have our presenters present one after the other, and it's after the second presentation that we will take questions. So while the presentation is ongoing, I will appreciate if any of us have any question, kindly note them down. After the two presenters' presentation, we will have 15 minutes for question and answer, to accommodate the ones we can attend to. Um, once we have exhausted the time slot and we still have other questions, the rest assured that those questions will be addressed, but that will be coming back to us in form of email correspondence. After the question and answer session, we will have one of the trustees of our partner, OTSCN, who give us our closing remark. Then we'll have the technical secretary of the district, while providing information about the district, will equally give us the closing prayer before we now round up around 1:30 with the anthem of ICAN as well as our national anthem. So that's going to be the order of the proceedings. I'm sure we are going to have and you are going to enjoy the presenters. Both of them are packed. I think we've listened to one of them before, and for those of us that were at that session, we appreciate, the insight that was provided. The topic of the technical session is the Nigerian tax reforms. Our first presenter will be speaking on the topic strategic implication of Nigeria's recent tax reforms, preparing companies and individuals for compliance and sustainability. Now that we have the tax signing into law and will be effective from 1st of January. That will be delivered by Dr. Von Oyinye Afolabi. She will have 60 minutes, approximately an hour to deliver on that topic. Once she's done with our presentation, it will be followed shortly by Prince Chinon Sonyemaka, who is going to teach us corporate communication skills. I think it's more or less like one of the things that we found lacking, in consultants, most especially our chartered accountants who are much more, concerned about the double entry, forgetting that, okay, after double entry, we need to be able to pass our message succinctly to stakeholders as well. So we'll be taking us on the topic, corporate communication skills, how to more or less like win clients and then provide information to our clients in a manner that which they understand each other. So without more further ado, we have about 100 on the platform now. And from the agenda, I think we can commence into the open prayer. Do we have Mr. Patrick Lucky on online? Mr. Patrick. While we prepare for the national anthem, like I said, be rest assured that for all the paid participants, we are all entitled to 5 ICAN accredited hours. So immediately today's lecture is concluded, this will be credited to every paid participants that we have on the call. Um, that's more like another information I needed to pass. Okay, so we commence on to the opening prayer, where we all recite the second stanza of our old national anthem. Here we go. O God of creation, direct our noble course, guide our leaders right, help our youth the truth to know, in love and honesty to grow, and living just and true, greatly love till height attain, to build a nation where peace and justice shall reign. Okay, so now that we are done with the national anthem, I think we need to start with the national anthem and the ICAN anthem. I guess that's okay. You can go ahead. The national anthem. Host, are you the one playing the national anthem? Okay, we apologize for the technical glitches regarding the anthem. I'm sure it will be corrected by the time we want to close out the program. We'll now go ahead while I provide context into today's program with my brief introduction before I call on the chairman of the district to give us his opening address. This webinar, tagged the Nigerian tax reform is jointly organized between Amuwo and District Society, the One Team Social Club of Nigeria, with an acronym of OTSCN. And it's meant to, enlighten us, regarding the new tax bill that just signed into law effective January, and how we prepare our respective clients, companies, individuals, on how to more or less that be compliant with the new tax law in order to prepare the companies the changes that is going to impact them, and how not to more or less that run into the challenges. OTCN, as in ICAN, is more or less like a district, one of the districts of the Institute of Chartered Accountants of Nigeria, made up of accountants that are within the Amuwo and District Society, where we all come together to enlighten ourselves and educate ourselves regarding the practice of chartered accountants. This time around, as in, this is the first time we'll probably be partnering, well, not the first time. This time, in the time past, we'll probably have been hosting various technical sessions for our members majorly, but this time around we decided to partner with OTSCN, who have a wider area coverage. It's a social and professional organizations that has trustees, have various other committees. But during the course of finalizing, when one of the trustees comes on board, they are going to give more information as regards what OTCN stands for, and how either as accountants or non-accountants we all can leverage and benefit from joining the organization. So as we prepare to go into the main lecture proper, I will invite the district current chairman and the person of Prince Adetayo Hassan, BSc FCA, who is the host, to give us his opening remark regarding this webinar. Over to you, Chairman.
Good morning.
Apologies. I thought you were giving one of the co-host prize. My apologies. I just noticed.
Okay.
We will
Thank you
correct
very much.
that. Go
Okay.
ahead.
I want to thank all the participants that were able to make it today's webinar. I'm very, very happy in the sense that we have over 240 participants, which is a landmark. This is our first attempt, and I think this is success for me. The topic for discussion, which has to do with taxation, and which is the in thing now, because come January 1st, 2026, we are going to have a new tax law operational. Today's webinar will serve as a tonic to give us what to expect next year. So I want to admonish all participants to listen attentively, take notes of important things which will impact on them directly or indirectly in the course of their jobs, ask relevant questions, and let us make it as interactive as much as possible. Do enjoy your day. Thank you very much. Thank you.
Thank you, Chairman, for the welcome address. Without wasting lots of our time, I think it's now time to usher in our first speaker, who will be speaking on the topic, strategic implication of Nigerian recent tax reforms, preparing companies and individuals for compliance and sustainable growth. While Dr. Von prepare a slides ready for presentation, let me quickly run through a brief bio in order to, introduce her. Dr. Von Oyinye has cognitive experience from, multinationals that she has worked with, as well as one of the big fours. She has worked with PwC, Dangote Sugar Refinery, Grant Thornton, Preston, Pedabo. And from the wealth of experience, serving various clients, either in the private sector or while she was at any of the big fours, she's here to present us on the topic, strategic implication of Nigeria's recent tax reforms. Over to you, Dr. Von.
All right, thank you very much.
You have 1 hour, ma'am. So
no, it's 1 hour, 30 minutes based on the
advice that you are given. Well, if you can help us, streamline it around 1 hour, we will appreciate.
Okay, since the participants will have the slides after the event.
Yeah. Over to you, man. So we'll be posting the clock at 12:30. You can go ahead.
Please, can you see my screen? Please, can you see my screen?
Yes, we can see your screen. Go ahead, ma'am.
All right, thank you. Good morning, my professional colleagues. As he has introduced me, my name is Dr. Yvonne, and we're here to talk about the Nigerian tax reforms. And as you can see in other platforms, the Nigerian tax reforms is not something that you could just speak on very quickly under 1 hour. So we're going to have a series of it. So I particularly streamlined it today to generally the Nigerian tax reforms to explain the 4 of them, but I narrowed it down to the Nigerian Tax Act 2025. And the next webinar on it should be either October or November, whereby we'll finish up on it. So our major focus today is on the Nigerian Tax Act, the objectives and application, taxation of income of persons, tax incentives and general provisions. The other parts will be on taxation of the petroleum operation, relief from double tax, tax of dutiable instruments, and we should hold in November. Why December? We should be able to hold the Nigerian tax administration, because the Administration Act is very important for taxpayers, for tax consultants, not just the tax authorities, because it's from there that they're going to pick so and so section will be used to on the taxpayers. So everybody needs to be knowledgeable on both of the acts as tax practitioners and taxpayers. So our outline today is on the overview of the Nigerian tax laws, interpretation of some of the laws, because I don't just want a situation whereby you just hear that, okay, we have development levy 4%, we have this, but you don't really know where it is in the law. So a session here is to talk about, interpret some of the laws to us. Then the next is on high on recent tax reforms. And the next is on the key changes to be aware of, to be on your fingertips. The more we hear about this, one of our sister institutes is almost on the 9th series of it. It's not because the laws are bulky. So the more we hear about it, the more we'll be able to acquaint ourselves ahead of January 1st, 2026. Then we have nudges for compliance and conclusion. Okay, we've talked about that's part of the learning objectives for us to understand the key provisions, identify and analyze recent tax reforms, recognize how these reforms affect individuals and companies, and then give practical insights for proactive and effective tax compliance. So the Nigerian Tax Act was passed because it's always necessary to know when the act was passed, just like we had Finance Act 2019, 2021, 23, so that you know how to implement it when you're doing maybe tax computation, so that you don't use a rate, just like when TET was from 2% to 2.5 to 3, you needed to know which year each of them was signed into law. So it's always good we put it in mind that His Excellency signed it on the 26th of June, 2025. It means most of the CIT will be 2026 FY, which will be filed in 2027 for most of the things to be implemented. And the implementation date is the 1st of January 2026, and we've been given a 6-month learning curve. There are 4 acts that were passed into law. We have the Nigerian Tax Act 2025, Nigerian Tax Administration Act, Nigerian Revenue Service Establishment Act, and the Joint Revenue Board of Nigeria Establishment Act. So what are the focus? Who are they focusing on based on each of the acts? The Nigerian Tax Act has 203 sections, 217 pages. It's primarily for taxpayers, just like we had the CIT, VAT Act, and also this is primarily for taxpayers, for individuals, businesses, multinational corporations, and also for tax practitioners, because if you're a tax consultant, you need to know what is in all the acts to be able to defend your clients and give advisory roles. The next is the Nigerian Tax Administration Act. It's the act that's going to be guiding the Nigerian Revenue Service to be able to issue out different judgments to each taxpayer. So it's good as taxpayers to know about what they'll be judged on. So it's not just the Revenue Service that should know about this Administration Act, but also taxpayers, tax practitioners, and the Revenue Service itself. An overview of the continuation is the Nigerian Revenue Service Establishment Act. We know that the Federal Inland Revenue Service, their name will be changed to Nigerian Revenue Service by January 1st, 2026. And they've been given autonomy, and we're going to make use of digital-enabled agency responsible for assessing, collecting, and managing federal, state, and local government. It's to our knowledge that most of the revenue departments of customs of so many organizations for the government will now be all accrued to the Nigerian Revenue Service, whereby we have just one post, whereby if you want to know how much the government has been able to generate, we don't need to be looking out to so many agencies. We just focus on one. So it reduces the leaking revenues and the flying revenues all over in the country. And the target audience is the Nigerian Revenue Service as the primary operator. And the significance is to establish a centralized data-driven revenue management system, taking over duties from agencies such as the Customs and several other agencies. The 4th is the Joint Revenue Board of Nigeria Act, which is JTB, like we know, establishes the Joint Revenue Board, Tax Appeal Tribunal, and the Tax Board Office. That is so much interesting to know that if you have a tax case and they brought out your tax liability and you are not, you've not agreed to those figures, you can always go to your tax board office, which is in 6 geopolitical zones in Nigeria, and air your view to them. So they'll be able to ascertain, they're like mediators between the tax authorities and the taxpayers. And it is a good development to assessment in Nigeria. So the Joint Tax Revenue Board 2 has been created, and the target audience is the Joint Tax Board. Also, it's also necessary for taxpayers, tax practitioners, and the Nigerian Revenue Service themselves to understand it for collaboration on policy implementation. So invariably, all the 4 acts are very important for each and every one of us, be a tax practitioner, be a taxpayer, or be you in the government. So these are our focus today. An overview of the Nigerian Tax Act. That's one of the topics on our outline. There are 9 chapters in the Nigerian Tax Act. Like I said, we'll be focusing on the Nigerian Tax Act today, but there will be subsequent series, and we encourage everybody to join so that you'll be able to get a grasp of what these laws are about, because those will be the laws that will be guiding us from January 2026. So we have 9 chapters in the Nigerian Tax Act. Is the longest act with 217 pages. Others are fewer. The chapter 1 is on objective and application. So inside each chapter is different parts. We have taxation of income of persons, which has part 1 to 11. We have taxation of income from petroleum operation, relief for double tax, taxation of debtable instruments, value-added tax, surcharge, tax incentives, economic development tax incentives, exemption from VAT, general provision. So all instead of carrying value-added tax act in one book, carrying capital in one book, carrying CIT, everything is a compendium inside this particular Nigerian Tax Act. So chapter 2 is basically what focuses on companies, and most of the time, companies always are interested to know what affects them. So under the chapter 2 is where we have bulky 11 parts: imposition of tax on income, taxation of resident person, non-resident person, assessment of profits, assessment of assessable profit, assessment of total profits, rates of tax, development levy, specialized trade or business. So this is where we have most of the things that are focused on a company in chapter 2 under the Nigerian Tax Act. Then we have the Nigerian Tax Act actually repealed some acts like the Company Income Tax, Industry Development, Income Tax Relief, PIT, Stamp Duty, Value-Added Tax. It actually amended some other acts and brought it into the act, like the Nigerian Export Processing Zone Act, NICDA, Tertiary Education Fund, to show that they were not actually scrapped, just that they were now brought into the act, the Nigerian Startup Act, then NASENI, Company Income Tax, Significant Economic Presence Order 2020. Then it also revoked the Value-Added Tax Act Modification Order 2021. The next to be on the interpretation of some of the sections of the act. It's very important that we know, at least, let's start getting acquainted with section D, section that, not just that we know development levy is 4%, and we never really know where it is found in the act, so that we'll get more, we'll be able to relate more to the act. So payee is one of the sections in Nigerian Tax Act. So there's no more payee, PIT law on its own, and it's found in chapter 2, section 28 to 32. So to make it organized, they divided it into different chapters. And inside different chapters, we now have these different sections that speak to different types of tax. So section 28 to 32 is on payee, everything that has to do with personal income tax, minus the schedules that actually help you calculate payee. So we have ascertainment of total income of an individual. Taxable income are from trade, business, profession, vocation, employment income, income from investing income, and chargeable gains, less losses, capital allowance, exempt income, and income of which tax is deducted at source. So we also have other eligible deductions, which is found in section 30, subsection 2 of payee. And we know that the payee table has changed, which I will show in the later parts of this webinar. We have the National Housing Fund, which is now optional for companies. We have the National Health Insurance Scheme. We have the pension contributions for individuals. We have interest on loans for developing an owner-occupied residential house. We have life insurance and a rent relief of 20%. So people have been hearing it in the space. It's a rent relief of 20% of annual rent. So it replaces the consolidated relief allowance. And so if your rent is maybe 100 million, that doesn't mean you do 20% of 100 million and put it as, you use it as the deductible expense. No, it has a maximum, it has a cap of 500,000. So in your schedule for payee, we're going to introduce the rent relief column, and it's going to be 20% of annual rent paid. So it means every employee has to bring evidence of rent paid. And I was in a webinar some time ago, a physical presentation, where people are like, what if somebody is cutting? That doesn't mean the person will not get a rent relief. Maybe the person will take a proportion from the person he's cutting with. So if your rent is maybe 100 million, 50 million, no. It means you will now put 500,000 as the person's rent relief. So it removes the 20% of gross income or 1%, whichever is higher. It removes it and replaces it with the rent relief of 20% of annual rent paid. That's one of the deductions for underpayee. So I decided to bring in the old and new table here for us to see what it was before and what it's now. We have, before it was the first 300, 300, 500, 500, 1.6, and 3.2 with different percentage. But now it is said that if you receive an annual gross turnover of annual gross income of 800,000, you have no tax to pay. And it actually implies that if you look at this slide, that the person that had a tax to pay that was receiving 800,000 was taking home 78,000 naira before. So from January, the person will be taking home 83,000. So it's increased by 4,500. But we've all been clapping on that. But at the same time, it's good because we decided to do progressive tax, whereby the higher income HNIs are taxed more than the lower income. But it's also very important that we acquaint our organizations and make them know that their net pay is going to reduce by January. That's for those that receive a salary, annual salary of 50 million. So whatever they're taking home before will definitely reduce. So it's not just the 800,000, but also speak to the entire organization, and if possible, give a template of what January will look like, even from now, so that people get, not when they receive their net pay, they say, oh, what's happening, and everybody starts contacting the human resource. So it's very good that we inform all staff in organizations on the impact of the new PE rates. So we now have 0%, 15, 18, 21, 23, and 25, ranging from 800,000 to 50 million. That is for your annual gross pay, not monthly. So this is a new table to be shared with you, and it's good we know both the old and new, because in a situation where maybe you're having a tax audit of like 6 years, it means you still have to know the old rates, and you now have to know the new rate. That's why it's good to know the implementation date, so that you know when to start defending your client based on the new rates on the particular year that you're doing a tax audit, dex review, investigation, as the case may be. So this is the sample. The calculator that His Excellency puts in the space, I also put it at the end of this slide for people to just use it and run your own salary and know what will be your take-home pay by January. So this is how the calculator was formed. It was created by the Tax Reform Committee by Mr. Taiwo Edile. So it's in this slide. So at the end of the day, someone that doesn't have a tax to pay will be taking a higher take-home, while someone that now has a higher tax to pay based on the progressive tax rate will be taking a lower take-home pay. Next is on interpreting some of the sections of the Nigerian Tax Act. So the objective is to unify legislation governing taxation. Application is to every person in Nigeria, personal on behalf of somebody. It could be an agent. You'll be taxed based on what you do in Nigeria. Chapter 2 is on taxation of income of person, like I said, divided into different chapters with different parts. So we have part 1 on the taxation of income of persons, shall be imposed on profit or gains of any company. That's section 3 of the Nigerian Tax Act. It can also be imposed on income of individuals, trustee, or estate. We have section 4 is income, profit, or gains chargeable to tax. Trade, royalty, fees, rent, interest, dividend, dues, family income are all accrued to tax in Nigeria. Trustee income, prizes, winnings, disposals of property, digital and virtual assets were actually added to, because a lot of people are making money with the cryptocurrency and they're not really taxed as they're supposed to be. So now they're going to take cognitive view of that and tax individuals that win all these games, and also virtual assets that people are making money on, digital assets. We also have chargeability of tax. It can be your name, an agent, a representative, a liquidator, an individual. That's section 5 of the Nigerian Tax Act. Then we'll move to section 6, taxation of resident person. Profit of a Nigerian company accrues to Nigeria, whether it is brought into Nigeria or not. Just know that it is accrued to Nigeria. Whether it is a foreign company that has a portion of the Nigerian company here, profit is also accrued to that Nigerian company, even though you're making profit from somewhere outside the country. You're supposed to add it to the profit of your company in Nigeria and add it for tax purposes. We also have the minimum tax rate, which must be met for every income tax paid, where a non-resident income tax paid is less than the ETR, meaning if you pay your tax and you divide tax divided by profit and you get maybe 10% instead of 15%, the rate is 15%, the Nigerian company will have to make up for it to ensure that, because on a normal day, if you make profits and you have a lot of OPEX, it can reduce the tax you're going to pay at the end of the day. So they want to make sure people don't use OPEX to swallow profits. So if you now pay tax and it's lesser than 15%, you have to gross it up to get the remaining value that there'll be an additional tax for that company to pay in case it's not up to 15%. Then now, Section 7 is the Nigerian dividend. We have gross dividend, whether distributed or not. So they are saying even though you don't distribute dividend or not, the authority is going to assume that you've actually distributed the dividend. And Section 8 says that in case gross dividend income shall be included in the profit of a company, dividend received by ways of shares cannot be included in a company's profit. So dividend received by shares, on a normal day, shares is on a statement of equity, so it's not going to be added as profit to that company. Then Section 9 is substitution of dividends for total profit. But there are sometimes you share dividend based on retained earning, you share dividend based on maybe some capital distribution. So they are saying in any case that there is no taxable profit, that the dividend shared will now be assumed as the total profit for that year, as long as it has not been taxed. If it has been taxed before, like a retained earning that was taxed in the previous year, then it will not be seen as a profit for that year. Then we have Section 10, certain undistributed profit may be treated as distributed. They say a company controlled by no more than 5 individuals shall be construed as distributed. So FRS is going to identify companies, or NRS, companies that have less than 5 individuals controlling them, and if they've not distributed profit dividend, they're going to make it in writing, and it must not be later than 3 years of any audited financial statement. So it's based on when you submit your audited financial statement, they do DEX review, and they now find out that the company is controlled by no more than 5 individuals, and dividend was not distributed or not. You can write to the organization to understand what is happening for additional tax liability. That's where they are driving to in that section. Section 11 is on partnership of companies. Where 2 or more companies come together to do business, the profits shall be shared among them and taxed same. Where one company is a non-resident but does business in Nigeria, the business shall also be taxed. Whereby a non-resident but does business in Nigeria, that business is supposed to be taxed, and it should be the final tax in that case. Then for a business carried outside Nigeria, the Nigerian entity shall include the share of profits. Maybe you're in Nigeria and you did business in UK and you got money there, you're supposed to add it to your profit when calculating CIT here in Nigeria, but shall not be applicable to partnerships engaged in petroleum operations. Then Section 12 is on resident individual. I just picked major parts of it here. The others will be discussed in the next webinar we'll be having. Section 12 is on resident individuals. Profit of an individual who is resident in Nigeria accrues to Nigeria, whether or not it has been brought into Nigeria. So they made it really clear on this issue of if maybe you are in Nigeria and you are working for a company in US who is supposed to take the tax. So this Section 12 and 13 really explained it to understand where it's supposed to be taxed. Section 13 is employment income. The income, gain, or profit from an employment is derived from Nigeria, where the employee is a resident of Nigeria, or duties are wholly and partly performed. So, because I've been in tax audit cases where you're talking about where was the activity performed, even though they are not maybe permanent establishments. If it's performed in Nigeria, in the space of Nigeria, then the tax is supposed to be taxed in Nigeria. So he's saying that duties are wholly or partly performed in Nigeria, remuneration paid by an employer who is a resident of Nigeria. Your boss is in Nigeria and you performed work in Nigeria, then the pay tax should be in Nigeria, or paid by a Nigerian fixed base or permanent establishment. By a lot of arguments towards that part, if the person did not stay more than 163 days, the person shouldn't pay tax here and all. So those are the arguments they were able to clear out from Section 13 of the Nigerian Tax Act, and shall not be liable to, or not liable, if your payee to is not liable to any country and you are in Nigeria, then definitely you have to pay your tax in Nigeria. Because you may say, okay, there is double treaty somewhere, but if you now look around in a year, in a 2, you don't pay tax at all into any country, it means where you are residing, you should now pay your payee tax there. That's what Section 13, subsection 4 was talking about there. Then there is an exemption of an employers that are startups. So if you're an employer that is a startup, you're exempted from such payments, then engaged in, for the startup, you must be under the Nigerian Startup Act, not just to just assume you're a startup. You must have registered, they've ascertained you're a startup, and they will now exempt you from paying, the employer from paying such exemptions of employers from startups. So you have to, there's a startup ecosystem that startups could go to exempt themselves from paying tax, or companies that are engaged in technology-driven services or creative acts. These are the exemptions they made from paying employment income tax, or a diplomatic agreement between two countries, like a tax treaty, whereby the tax authorities have ascertained that you actually paid your pay in another country based on the wordings of tax treaties. Then we have section 14, benefit in kind. When I was reading, it was quite interesting, whereby they said if, apart from an accommodation, if an employer gives you a property that he's the owner, then it is assumed that you've enjoyed 5% of the worth of that property and should be added to your calculation for payee. Then they said where you actually, the employer gives you a house to live, it is also deemed that you enjoy 20% of the annual rent, and it should form part of your annual benefit. So I just hope that the human resource and those that prepare payee and the payroll will be able to take cognizance of these little things and make up the calculation for payee, so that they'll be able to get the right payee calculation, so that during tax audits or tax reviews, you'll not be caught unawares when the tax authorities tell you that you've not added 5% of the property, or you've not added 20% of the annual rent that's supposed to form part of the person's benefits. Then they brought some exemptions that are quite interesting for payee, that if your employer gives you meal ticket, it's exempted from tax, from payee tax, or uniforms or other protective clothing, work tools or equipment. Those are exempted from personal pay-as-you-earn tax. Then section 15 is partnerships of individuals. What does it include? The other section was a partnership of companies, where two companies are in business together. They are taxed differently based on their profit sharing. So this partnership of individuals, they have benefits in kind, partners share of profits or loss. So partners, I've seen where partners at the end of the year, they get loss based on the expenses they've incurred. So in case of the loss, the authorities have the right to reassess to affirm the same position that for that year, the partners made loss and did not share profits. And in case they even made loss, but its benefit in kind has added so much more that it absorbs the loss, then the partner will now pay tax based on the profit that he has made, net of the loss that was made in form of the group partnership. Then section 16 is on settlement, trust, and estates. The tax is based on the 5th schedule of the Act to get the percentages used to charge incomes of individuals from properties gotten from a deceased person in or outside Nigeria. Then the schedules are 13 in number for the Nigerian Tax Act. We have capital allowance, export processing, free trade entity, deductible interest, income from settlements, petroleum royalties. So there are 13 at the end of the Nigerian Tax Act, which should be in our pocket always. So always look into it and see which percentage should be used at different points in time. So some of the other points I picked from there is the rate for companies. We have 0%, that's chapter 2 on part 9 of the Nigerian Tax Act. We have 0% for small companies, and small companies have been increased to 50 million, no more 20 million, but with a cap that you must not have fixed assets more than 250 million. So some people may decide to go and buy assets and keep their money there, so that they say, okay, they don't have up to 50 million. So there's a cap of, you must not have up to 250 million naira worth of assets, and your revenue must be 50 million and above before you can get 0% for small companies. So you have to know that. Then 30% for medium and small companies. Effective tax rate is 15% for MNEs, that's multinational enterprise, and with an aggregate turnover of 20 billion, which is the threshold. As seen in the payee computation, that's rate of tax for individuals. It's also found in the 4th schedule, that's the payee computation. Then development levy too is at 4%, which I'll be talking about more in later slides, of chargeable profits and it's not applicable to small companies and non-resident companies. That's the development. Development levy is going to be shared among NESENI, going to be shared among third fund, going to be shared among every other agency that was merged together and now formed as a development levy of 4% of accessible profit after deducting all allowable and non-allowable expenses. So the next on our outline here is highlights of recent tax reforms. So I decided to go deep into the different sections before we now talk about general, so that please you'll be able to pinpoint different sections. So, okay, based on section 60 of the law, development levy is 4%, not just to know that it is 4%, but you don't know where it is found. That's why I started with each of the sections to pick one or two good things from there before we now talk about the general tax reforms that is on the air. So one of it is the taxes for workers earning 800,000 and below annually. Then we have 25% PIT for individuals earning above 50 million annually. Then small businesses is 100 million and fixed asset of less than 250 million. The turnover of 100 million is for small companies, not 50 million, sorry, and fixed asset of 250 million, less of it. So you must have less of a fixed asset of 250 million and less of 100 million turnover before you can be said to be a small business. Before it was 25 million, but now it is 100 million before you can be said to be a small company and a fixed asset of less than. So it means the authorities are going to pay so much attention on non-current asset schedule to ensure that it is done properly, and even maybe be so particular about CAFA to ensure that these assets have been verified and they're actually on the field and working and depreciated accordingly. Then company income tax is 30 for medium and large and 0 for small companies. Then we also have value-added tax exemptions. Additional items were added to it on essential goods and services consumed by the poor, including food items, medical services. Some are already there before: educational fees, electricity generation and transmission, transportation, renewable energy, CNG, baby products, sanitary towels, rent, and fuel products. So some have been specifically stated here to be sure, because you may not be sure. The transportation VAT table, people may not have been sure. So now they made it plain and clear that, okay, CNG, no VAT, renewable energy, no VAT, rent, no VAT, fuel product, no VAT. So it has now been explicitly stated. Then we also know that the Nigerian Revenue Service will now collect revenues previously handled by agencies such as NIMASA, MPA, as Nigerian Port Authority, and UPRC, Nigerian Customs Service. The Nigerian Revenue Service has a lot of work to do to ensure that they are not overwhelmed with the work. And I already know they are working towards it already in great effort to ensure that everything is done properly well. Then VAT remains at 7.5%. VAT was one of the major issues that made the act even get delayed to the point it was signed, because of the sharing ratio that a lot of people did not understand until there were a lot of sanitization programs enlightening people about it and telling people that it actually favors everybody before it was now agreed upon and signed into law. Then we have introduction of 4%, like I stated earlier, of accessible profit. So after you get your accessible profit, it's even good, instead of doing it that 2.0 tertiary education 2.5, NASENI, different rates, especially in tax pro max, there'll just be a line of development levy at 4% of accessible profit. So it will now be allocated to student education loan fund, third fund, NIDA, NASENI. So it helps us streamline a lot of tax legs in the space. Actually helps streamline leakages in the ecosystem. Then the development levy is not to be collected for small companies. That's the 100 million less than 250,000 fixed assets and for non-resident companies too, because they're not residents here, so they're not developing here. So there was no development levy for non-resident companies. Then we have because they already pay withholding, which is the final tax. Then we have FIRS, now named as NRS. Then we have CGT and digital assets, tax gains from virtual assets. Then we have minimum tax rate, which I said earlier on is 15% for MNEs, which is 20 billion Nigerian turnover, 750 million euros. The minimum tax rate is 15%. And like I said before, if it's not up to, Nigerian entity has to beef it up and pay the additional tax that accrues to it, so that people don't just swallow tax in the name of OPEX, and they'll have a lesser taxable profits or taxable income to charge tax on. Then we have double tax treaties, recognizes 14 treaties. Then we have tax on cryptocurrency and virtual assets. So they've taken cognizance of the cryptocurrency and virtual assets to ensure that nobody's escaping the law. We also have exemption of stamp duties on rent below 10 million. If your rent is below 10 million, is exempted. I saw one post recently on by the head of tax reforms, Mr. Taiwo, that said they are informing landlords to ensure that they start remitting and start remitting their tax on, because most don't really take it particular, but they are sanitizing them and telling them that from hence, please let's start paying withholding that you deduct from that you receive from the rent that you collected. So increase in tax exemption threshold from 25 to 50. Then we have introduction of the Office of the Tax Ombudsman to protect taxpayers against arbitrary tax assessments. Like I said before, there are 6 geopolitical tax ombudsman offices in case you have any tax liability that you've not agreed on when the assessment has come to you. So before you sign or agree, you can go to a tax ombudsman to hear you as like a mediator between the tax authorities and the taxpayers. Then we have tax disputes affecting businesses to be resolved within 14 days. So the tax ombudsman, the tax authorities will say, okay, you've taken your matter to the tax ombudsman, fine, we'll give you 2 weeks because it has been mandated that they need to use 14 days to answer you. So they have to work with speed to ensure that they answer all taxpayers that come to them. Then we have introduction of economic development. We have introduction of economic development incentives for priority sectors. We have expenses incurred by a startup within 6 years of pre-commencement. Is also such is also tax and deductible. We have VAT exemption on purchase of real estate. So if you are purchasing a real estate, VAT is exempted. We have exemption of tax on sale of shares up to 150 million and gains not exceeding 10 million. So if you receive a gains not exceeding 10 million, it's tax exempted, or sale of shares of up to 150 million. It's exempted from tax. I think it was 100 million in Finance Act 2021. So then we have progressive personal income tax rate of 25% for HNIs. Then we have tax exemption on compensation of loss of employment. Before it was 10 million, but now it's not exceeding 50 million for compensation of loss of employment. Then the next on our outline is on the key changes to be aware of. So like I said before, please, can you hear me? Just want to confirm.
Yes, you are audible, ma. Go ahead. We can hear you.
All right. So the next on our outline is key changes to be aware of from the Nigerian Tax Act and tax reforms. Is the consolidated relief allowance. So everybody is to know that there is no more consolidated relief allowance of 20% of gross income plus the higher of 1% or 200,000, whichever is higher. It has been expunged and replaced with a rent relief of 20% of annual rents paid, subject to a maximum of 500,000. So you also have to start briefing your staff to keep the records of their rent receipts, because most people don't follow up with such, they just pay and move on. So everybody has to be informed earlier enough, because some people's rent they may start paying for next year rents from now. So it's good. I know you are doing pay annual returns in 2027, you may need it and they don't have such receipts. So the HR, human resource, whichever department handles staff, have to start informing staff about the needful even from now, so that everybody will do the right thing, so that you will not now say because somebody did not bring a rent receipt, you won't give the person the rent relief. So the onus falls on us from now to inform staff so that they will do the right thing immediately. And we should not forget it has a maximum of 500,000, because during payee reviews, the authorities will ensure they look through to ensure you don't take any rent relief that is more than 500,000. It's a very important clause to know from now and even to inform your staff from now. Then we know that FRS is moving to the name called Nigerian Revenue Service, meaning all the revenue in Nigeria now goes to the Nigerian Revenue Service, and it serves as a central authority for federal, state, and tax collection. We also have value-added tax. So like I said before, the value-added tax division was what caused the delay, one of the delays in the Tax Act from being signed. And at the different bills, the different versions that came out, VAT rate was to be moved to 10%. But after all the back and forth, it remains at 7.5%. It's not increasing. And it reduced the rates between state and federal. So federal government reduced from 15% to 10%. It was 15 before, now it's 10. States increased from 50 to 55, and local governments remained at 35. So it's federal and states. Federal gave up 5% to states for the sharing ratio. Then for state allocation, that means within this 55% for states, it will be shared among all states. 20% will be based on population. So 20% per your population, those amounts will be calculated when they are doing FAC allocation. We have 30% based on the place of consumption. So people are like, okay, where they consume, let them enjoy some of this tax, since it's where they consumed this particular goods or service. So 30% will be based on place of consumption. And for local government, 70% will be shared equally, while 30% will be shared based on population. Then we have introduction of a 4% development levy. So the new 4% replaces all the taxes such as tertiary education. That's TET that was 2.5 it moved from 2 to 2.5 to 3. It has been expunged. Then we have NASENI that also came out. We have NITDL, National Cybersecurity Defense. They've now merged it into a levy called development levy of 4%. Like I said before, it's not applicable to non-resident or companies that are small. That's 100 million below. They don't Nigerian Education Loan Fund. We have 15% to NITDL, we have 10% to NASENI, we have 10% to National Cybersecurity Fund, 5% to Defense Security Funds. So I believe it's good whereby you have one post, then you now start allocating that. Each person already has their post. It will be easy to monitor what is going on there. So it's a welcome development. Then the next is the tax upboard, like I talked about. Appeal tribunal established to handle disputes related to federal and state tax laws, aiming to enhance efficiency and credibility, while the tax ombudsman will be created to address taxpayers' grievances. I think they've even appointed, because it was in the news last year or earlier this year that they appointed 50 people across the country. So they already appointed the people that will represent in the 6 geopolitical zones. So if you're in the east, you don't need to travel far. It's within the geopolitical zone, or in the north, or in the south, or in the south, southeast, southwest, northeast, northwest, north central. So there are 6 offices in Nigeria that you can go. I believe they'll have a lot of staff, because if they're giving 14 days to respond to you before you go back to the tax office, and there are so many taxpayers, so many companies, they will have a lot of work to do to ensure that they give fair hearing to tax liabilities before tax authorities now raise demand notices for taxpayers to pay, or if it moves further, it now goes to court where none have been able to resolve it. So it means the tax ombudsman doesn't mean the court has been closed. No, it's just a mediator. Before you now still say no, you can still say, okay, no, this is not it, and you say, okay, let's go to court. So it doesn't remove the fact that cases can still go to court, just that they're a mediator to hear you out as a taxpayer. Then we have enhanced penalties. Failure to register has moved from just 50 to 100. Failure to file just 50, subsequent month, 200 in the first month. Failure to keep books, that's under the Value Added Tax Act, and then company income tax, up to 3 years imprisonment upon conviction. So it's always good to stay off from anything that has to do with penalties, because if they do compounded rates, the rates of penalties and interest are always even more than the tax that is supposed to have paid. So it's always good to stay compliant and get acquainted with the laws early enough. Then we have property tax. There has been exemptions from real estate transactions. If you're buying a real estate, you'll be paying value-added tax on it, including land purchase, property sales, rentals are exempt from VAT. It aims to make housing more affordable. A lot of people, just like abroad, whereby young people already have houses because they are paying based on mortgage, there's accessibility to house. You can see someone paying for a house for 25, 30 years, but at least the person owns the house. So they're trying to make housing more affordable by encouraging that value-added tax is not paid on such rentals or real estate transactions. Then we have stamp duty. Properties we rent above 10 million per month, we attract stamp duty. So below, like I said in previous slide, will not attract stamp duty. Why those below 10 will be exempted? This means landlords with high value properties, we need to pay stamp duties, why those with low value properties won't. So that's why the tax reform team are also encouraging landlords to start remitting the tax they're supposed to remit, because they're also taxable persons in Nigeria. Then we have capital gain tax. The sale of primary dwelling house is exempted from capital gain tax. So the next here, give me 430. Okay. The next here is which is the last here is key. Okay, we are still on the key changes. These two M&Es. We have the 15% effective tax rate for 20 billion, greater than 20 billion turnover, or greater than 750 million euros. We have the profit here is the effective tax rate is profit divided by tax paid. Then the profit here is net profit before tax in the AFX, less of 5% depreciation and personnel costs for the year. So it's always important to get such clauses right. But when you are getting the effective tax rate, the profit you are using is net of 5% of your depreciation for that year and the personnel cost for that year before you can get your effective tax rate and see if you are above at 15% or lower. Like I said before, the Nigerian entity has to pay up for the difference between the effective tax rate calculated and the one that was actually paid, because it must be 15%. This reduces the BEPS of base erosion, profit shifting, whereby you are in the world, you're paying the same rent, you're paying the same tax, so you don't need to move your profit to another country to be taxed. It will actually increase the revenue Nigeria is generating, because most countries do not move to Mahmuda and move to countries that have lower tax rates. So it's actually a welcome development. We also have controlled foreign companies. First time introduction, Nigerian taxpayers will now pay tax on undistributed profit. Like I said earlier on, whether it's distributed or not, it's going to be treated as if it was distributed. The next is force of attraction rule for permanent establishment. Non-residents with a PE in Nigeria can no longer isolate taxable activities. All income from similar activities may be taxed under the PE. There are different clauses of what makes up a PE, and that's a permanent establishment. So even though the work is split or performed offshore, it's just to ensure that profits are not eroded in the name of you have entities outside the country. Then we have capital gains tax on indirect share transfer. Only direct share sales in Nigeria are now taxed. 30% CGT on indirect transfers. Selling an offshore holding company will not attract tax. Exemptions will be if you have 150 million per year and gains of less than 10 million. So it's always good to get all these figures up so that at any point you remember that these are the exemptions to such taxes. And we have minimum tax for non-resident. Non-residents with Nigerian sourced income now face a floor tax. That's a percentage of EBITDA from Nigeria or the higher of applicable withholding rates of 4% of gross income. Then we have audit global structures. So now we are the TP, people have to keep their TP books properly, and they're even going to be you have to overhaul it, because now you don't need to start doing mathematics of which country you're moving your profit to. You just do the right thing, pay it in Nigeria, and move on with business. So it's actually the transfer pricing team of every organization has to revisit to ensure that they are doing their disclosure well, they're doing their declaration filing, doing country by country appropriately, and as at when due. So we've joined the global minimum tax that was in the air last year of Nigeria not signing the 15%. So from now, from 2026, January 1st, we'll be having a minimum rate of 15%, which is across board globally. The next on our outline here is nudges for compliance and sustainable growth. So we are trying to say, what should people do from now so that to be able to comply? It's not by December, and everybody has gone home. You say, oh, salary scale will change in January. That's why they wanted to implement it immediately, but the reforms team appealed that Nigeria should be given a learning curve, which is actually very important because there are 4 laws that have been changed. And it's not just minimal changes, it's major changes. So people need to keep hearing, and as you are hearing, you go back to implement, read through the slides given to you, see where to change, see what to do, so that you are listening and you're acting at the same time, so that you are preparing yourself. This is in August, we have 4 months before the end of the year, so we need to get ourselves fully acquainted. Then one of the things you have to do now is to update your payroll software or template to reflect the new tax bands and rates. Ensure automated calculations align with the updated payee structure. So if you have softwares you use, you ensure that it's in line with what is in, for instance, the payee calculation calculator in Nigeria. Compare it with what you have in your own software to ensure it is aligned. Then test payroll runs in advance to avoid over deduction. This payroll issue is very important because it's people's take-home pay, and some people don't joke with their take-home pay. So you need to explain to them from now so that they understand what is happening in that space, because some people may not really understand, especially the high-income network individuals in your organization. Then net to gross packages may need renegotiation. So people may spark conversations that they cannot take a amount lesser than what they are taking. So you need to quickly run this HR discussion as fast as possible in your organizations to help a smooth transition. Then HR team need to communicate and anticipate changes in take-home pay to staff. Then finance team has to reforecast salary-related expenses, especially for large workforce. Then another nugget for compliance is to keep learning, say unlearn, learn and relearn. So you have to ensure the finance and the tax team, because some people that maybe are in HR too are very important. Maybe a cleaner in your organization say, it's not my business, is it me that is implementing it? But on no instance with a finance person or a tax person in your organization not know what is happening in the space. So you should encourage more of such trainings. You can also do a tailored training where after this one, you say, okay, you want OTSCN to help you train, you want to understand it one-on-one. We are open to such learning just to ensure that companies get it right and are implementing it in the right way. We also have engaged experts, tax consultants for compliance, audit and strategic planning. It's also a time where you can do tax health check to understand what's happening in your business for the last 6 years, which is a statutory number of years, and know what to do going forward when these changes have occurred. Then a nugget for compliance too is to ensure that you file 14 days of every month. If filing for VAT is 21st, ensuring your company you file from the 14th so that you don't get close to anything that has to do with penalty or interest, because the amount may even be a new return, but because you did not just file, the filing is the fault. So ensure that filing is not far ahead of the 21st. Then companies and because of the new learning curve, it's just very good to just be an obedient taxpayer, because there are so many flaws that will occur because people are trying to get acquainted. So if you have to file 21st, quickly file on the 14th and know you filed for that month so that you just avoid stories that touch, because you did not. They say ignorance is not an excuse. This is a big time where you hear ignorance is actually not an excuse, because the laws are there for people to get acquainted to. Then companies can actually turn these tax reforms into a competitive advantage with the right strategy. Then we have you must ensure arm's length pricing for intercompany transactions. So to prevent liabilities that could come up from transfer pricing between one subsidiary or the other, or you have to ensure that you are doing the right thing when it comes to arm's length pricing. Ensure that you are either taking it from the market price, you are using the right method, and not just doing kukere to the answer, because there's going to be particular interest on transfer pricing and arm's length principle when it comes to related party transactions during tax audits. Then we also have the minimum tax rates. So companies have to quickly run their you have to quickly run it behind the scene to ensure that the minimum tax rate reaches 15% of what you took of your returns, so that when you do minimum tax rate, it will not be 9%, that you leave your Nigerian entity to pay the remaining. So for a foreign entity, calculate it and ensure that the minimum tax rate, that is the tax divided by profit, gives you 15%. You have to do a forecast. So finance people have to do forecasts to ensure that companies with 50 billion Nigerian turnover are doing the right thing of getting the right minimum tax rates. Ensure if you fall under the clause, you meet the 15% effective rate. That means it's going to impact your budget. So you have to forecast from now on your P&L account to ensure that the minimum tax rate you calculate is 15% in order to avoid charges from the Nigerian authorities. Then we also have, there's a new system of e-invoicing. And on reading so many of the circulars, it states that FRA just started with 16 large companies for a test run, but it's planned to go across the whole country, but they needed to test run it when they started with the large companies in Nigeria, and people should be open to understanding the space, know what's happening. When it comes to you, be open to learning. In this season, you have to just be open to learning, but ensure you get the right information so that you don't books are right. What's my minimum tax rate from now? Call tax consultants in to help you, and then check that you're on track. Always ensure you optimize costs. Not really your cost is not just over inflated. But most time doing tax audit, they look into direct costs, look into OPEX. So make sure you do the right thing so that at the end of the day, your tax liabilities, additional ones, will not be so much higher than what you supposed to be. Then you secure a tax clearance too. It's also important to get tax clearance from 2026. And at every tax clearance, you know that your company is aligning with the authorities. So we also encourage tax clearance to be gotten and then build compliance culture. So in this season, it's just good to be compliant, withholding 2 million less, you don't pay above you pay. Just ensure you know the law and you are following the law. You don't know the law, you seek for more trainings. You know the law, you implement it, and after implementing, you file. You do the last leg of filing. Then also look into the incentives given by the government in the schedules to see which benefits companies, because different incentives benefits different companies. So this is it. I also added the withholding regulation 2024 here for people to ensure that they are following the rates for both resident, non-resident, resident, and non-resident for corporate and non-corporate individuals, and also the personal income tax calculator and the CBN rates website. That's all for today. Thank you very much. We hope to see you in the next webinar to continue on the Nigerian tax reforms. Thank you. Mr. Latishi, over to you, please. Hello, Mr. Latishi, please, are you there?
Hello, yeah, I'm here.
Hello, Dr. Vaughn. You are done?
We can't hear you, please. Yes, yes, I am.
You are done now. Thank you. Thank you for keeping within the allotted time. And you can see the various comments and clap coming on from the audience. Thanks for that masterful delivery. We will surely come back to you with recommendation. But still on the line for any of the questions. For any of our participants that has questions meant for the first paper presenter, please note them down, and you can equally put them in the chat box. I'm sure she will attend to them. But after the second presenter, once we are done, we will take, all the questions we can accommodate to take. Just a little announcement. So I understand there have been some technical glitches relating to, not for you, Dr. Bon. I'm just addressing our participants. We were meant to have a 1,000 capacity Zoom platform. For one reason or the other, which I think the district executive as well as the OTSC committee members are working around to try and understand what brought about that challenge. But how we resolve for those that have paid but have not been able to more or less like join the participants, the district and the OTSC partner will come up with, what will be beneficial to all the participants. So be rest assured, nobody is going to be disenfranchised. The executives and the OTSC are looking into it. What brought about the 1,000 capacity that now restricted to 100 and disenfranchising, more than 150 paid participants. But you will duly hear from us on, what will be beneficial, to everybody. So the districts that we are, and we are taking action on how to address it. Thanks for that. So in preparation for the second paper presenter, like I mentioned, if any of us have questions, please let's put it in the chat box. Dr. Vaughn is on to, attend to it. For any of the ones that's not been attended to that we can accommodate during the question and answer section, we will, address them during the question session. So as I prepare the second paper presenter, who is going to Prince Chino Sonyemaka, who is going to take us on corporate communication skill, which is, I will read his bio prior to his own presentation. Prince, are you on the call? Prince Chinoso, please confirm you're on the call. I can't find you, Chinoso.
Let me call him to find out.
Okay. Prince Chinoso, if you're on the call and you are not one of the co-hosts, signify by raising your hand so we can give you the co-host rights. Okay, I've seen him, Mr. Prince. So let me give you the co-host rights, or ask you to unmute.
Okay, I'm on the phone now.
Okay, so you can prepare your slides while I read through your bio, to the participants. Prince also holds master degree in business administration, is a graduate of accountancy, and currently running his final level of his PhD program in management and entrepreneurial studies. He's a fellow of the Institute of Management Consultants, fellow of the Institute of Development Studies Administration of Nigeria, an associate member of ICAN, and also an associate member of the Institute of Credit Administrator. He's a certified consultant from UK, London, certified in Zero Software, advisor from Illinois, and equally a certified Zoo accounting software. So Prince is going to, present a paper titled Corporate Communication Skill. Yeah, over to you, Prince. You have 30 minutes for your presentation, sir.
Okay, good afternoon. I want to share my slide, but I'm not permitted. Can you give me the sharing rights?
Yeah, just give me 1 minute. Um, Host, please, can you make Mr. Princio a co-host so you'll be able to share his screen? Hello, V-Square Training. Please, can you?
Is it Prince Ihendu?
No, it's Mr. Princio. He's
CO.
currently.
Okay, excellent.
Okay, so you should be able to share your screen now, sir.
Okay. Yeah. Same.
We'll let you know once. Okay, I think we can see now. So you can go ahead.
Confirm. I see my screen.
Yes, we can see your slides. It's not yet in presentation mode. In case you want to make it.
Okay. Good morning. Good afternoon, ladies and gentlemen and professional colleagues.
Okay. So your time starts now.
Jump
We'll be
in
ready
mode
in
now.
5 minutes, sir. Thank you.
Okay. Yeah. Good afternoon, professional colleagues. I also been elected to be part of the facilitator for today's program. The short time we'll have, we're looking at corporate communication skill, and some of our take home or take away on this presentation. We're looking at understanding the key communication skills, as well as the elements of corporate communication. We'll also look at the how to develop a communication strategy and the roadmap, understanding the barriers to effective communication. We have a brief of the view of report writing, common mistakes, and also some way forward around report writing, which is one of the key things that we find around corporate communication in an organization. To the third party out there and to the organization where he is working with. So in by way of corporate communication, we look at how the individual should be able to pass his message
Is it my network? I cannot really hear you.
Hello, sorry for that. I think I
Apollo,
had
we lost. Okay, Prince is back. Please, can we make him co-host so he can share his slides?
okay.
Yeah, we
Can
have
you see?
several co-hosts here. They can also make anyone co-host.
I've tried to make him co-host. I couldn't. That's why.
Okay, sorry about that.
Yeah.
Can you see this slide?
Yeah, we can see the slides. Just make it in presentation mode.
Can you see the slide now, please?
Yes, we can see the slides, but it's still not in presentation mode.
Sorry for that.
No problem.
Expand it and put it on presentation with the button just before the zooming in or out.
Okay. Yeah, it's
Maybe
not in presentation mode now.
If you can change it network to or something, network is breaking.
Participants for the network glitch, but I'm sure Prince will be back. But pending when he comes back, maybe Dr. Vaughn can start attending to some of the questions that have been dropped in the chat box.
oh,
Okay, he's back.
sorry about that. The network is misbehaving over here. I've been trying to use two network, Airtel and Blue and LTN.
Okay.
Okay, I don't know whether you can see me now.
Yeah, we can see your screen, not yet in presentation mode.
Okay, it's there now.
Okay. Yeah,
Okay,
it's not in
yeah.
presentation.
Okay, sorry about that short cut. The what we are trying to look at is the corporate communication skill in terms of definition. We are looking at it to be the ability and competence that is necessary for effective communication within the corporate and business context. In our organization, we use to communicate various audience, both internally and externally. The audience will look at are mostly the customer, the prospect, the employee, the stakeholders, the investors, and all the parties that we, as in the corporate organization space, will interface at time we will continue to run our business and continue to manage our space where we work or interact with people out there. We'll look at how the skill can be made to be clear, concise, and verbal and written communication, the crisis and skills and communication skills, the negotiation and persuasion ability, the proficiency, and its various communication channels. We know that in effective communication, for it to be much meaningful, for it to have its strong hold, it has to be enhanced in such a way to manage their crisis and drive their business success by conveying unified vision, values, and goals to internal and external audience. Some of the elements of corporate communication we look at it from the angle of internal communication, look at that consists of measures to communicate with the workforce
We've lost Prince again. I guess this is due to network challenge. Let's give him some time to, come back. But in order not to waste our time, like I mentioned earlier, what's the right word now? Maybe we just need to take question and answer session now. Nobody has probably more or less been able to get anything from me based on the network is using. Can we take questions relating to Dr. Vaughn's questions? So if any of us have questions, can we raise our hand while I try to reach out to what we have in the chat box and,
to clear those. Dr. Vaughn, are you on?
There are some questions on the chat box.
Okay, yeah. So I want to read them out. So there was a question from Nathan Akpanta. He said in the slides there was a confusion as to the threshold for CIT exemption in relation to turnover. Is it less than 50 million or less than 100 million? Okay, you've answered that already, that it's less than 100 million.
Based on section 56 of the law.
Okay, then any turnover threshold for VAT remittance in the new act as at today is 25 million. I think that do you have answer to that? Hello, Dr. Vaughn.
It's the same with company income tax.
Which is 50 million, right?
For small companies 100
million for small companies. Okay. Okay. Let me give to Ogomoloki, yeah, all the two presenters slides to be shared. You will get it from the same email that provided with the link to the meeting. Miriam Ofodu, kindly unmute yourself to ask a question.
Okay, good afternoon. Is Miriam Ofo-Edu?
Oh, my apologies.
Ofo-Edu. Okay, thank you so much to the presenter, Dr. Onyinye Afolabi. So my question is just two, but they are all related on the tax exemption threshold. You mentioned 800,000, someone earning 800,000 and below is exempted from tax. I want to ask if that 800,000 is the taxable income or the gross income. Same related to the 50 million at 25%. So that's my question. Is the 800,000 and below taxable income or gross income? And is the 50 million at 25% just the flat rate? And is it a taxable income or a gross income? Thank you. Over.
Okay, thank you for that question. Is a table, just like we had a formal payee table. So the first 800,000 is 0%. So if somebody's annual is annual gross income, not monthly, the annual, January to December, that's like 80,000 times 12. So people that receive such income to be 0%, 0% of maybe 500,000 is 0%. So anybody receiving 800,000 below doesn't have a tax to pay. So the next 2.2 is 15%. So it's on a scale. The next 9.0 is 18%. The next 13 million is 21%. The next 25 million is 23%. Then above 50 million is now 25%. So it's on a scale. It's not direct 25% of 50 million. No, it's when you now receive above based on cumulative summation. You will now do the 25%. So it's a scale. The table has been put in the slides to be shared. So it's not a direct percentage.
Okay, thank you, ma'am, for that response. So can we pause the questions now so that we can resume Prince's presentation now? Prince, do we have a stable network to run the rest of the session now? Hello, Prince, can you hear me?
Okay. Okay, I was muted before. I couldn't hear you. I can hear you now. I think I've changed to another network. I think it's better than the one I'm using before.
Okay, so hopefully we'll have a much more smoother session now.
Yeah, please, I'm sorry about the technical glitch. I don't know how to explain this, but then the capacity is now expanded, so you can encourage any other person that that was prevented from joining.
Both internally and also externally, and that will generate awareness of the new products and also the company milestone. While we communicate the company corporate social responsibility and effort. Today, public relation professionals are fusing traditional skills to work with the modern tools and the channel to create a consistent narrative that reach various audience. That is why we look at external corporate communication and relations to be more key, to be one of the elements that professionals should be able to imbibe, to be able to drive their skills in a workspace very efficiently. So we look at another element that talks about executive communication. In executive communication, both internal and external channels is needed, and those needed to be leveraged upon by this executive. You know, for the leadership team engages direct communication with other teams, while externally, executive strong social presence can serve as such leadership platform. Executive members of any organization typically communicate externally through social media, media presence, and talk at conferences and all that. So this aims to promote brand awareness and increase sales. In many of companies now, at the moment, there are communication gap between the leadership team and other employees. Breaking these gaps with communication from leadership can help earn the trust of the employee and also provide stability in the workspace and better understanding of corporate company goals. So we also look at another element of corporate communication on the aspects of brand and marketing communication, which talks about the consistent messaging that conveys the organization identity, values, and offerings. These are the things that we look out for as corporate personnel, professionals in the workspace. Any interaction with customers and target audience, it falls under the umbrella of brand and marketing communication. There is a wide range of channels to conduct branding and marketing activities, including social media, traditional advertising media, emails, review websites. Unlike other functions of corporate communication, marketing and branding can directly related to companies' revenue. And here some of the main goals One is to increase brand awareness. Another one is to gain leads and sales, then and community building. We'll look at required skills for corporate communication professionals. These skills include active listening to understand clients' needs, clear and concise verbal and written communication to convey information and expectation, empathy, and to build rapport and address concerns, adaptability to customize communication to each client's personality and preferences, and problem solving to resolve issues collaboratively. When we look at some aspects of skills, we target hard skills, proficiency in creating and editing written content, understanding companies' values and drafting guidelines, ability to analyze key performance indicators, managing digital space and channels, familiarity with crisis, communication strategies and protocols. These are some of the aspects tagged as hard skills that needs to be considered as professionals in being able to manage your workplace, manage your duty, and communicate to your clients out there. So some of the soft skills we also looked at is relationship building skills, leading multiple teams, problem solving, critical thinking, strong verbal communication skills, and the ability to work on multiple projects simultaneously. So, as a professionals, we should be able to, interact, be versatile, and interact with issues, getting resolution as time comes. As we are, in organizations, as managers, I'm seeing that all professionals or chartered accountants who are professionals also in any organization or attending to the clients, to be able to versatile to handle critical issues and get resolution in not just having one point of activity. You should that have various ability to manage projects running simultaneously and be able to get results. That makes you have a corporate communication skills as a professional to be key. So developing a communication strategy and roadmap, you should be able to understand their audience, who we are communicating to. If you understand the distribution channel, how you reach them, the timeline and KPIs are some of the things that are necessary for you to draw out a strategy in communicating to both your employees, your colleagues in the office, and also to the clients out there. That will sell more better when you have all these strategies in place to be able to communicate. It's a detailed work communication plan that will act as a course of action and help you to get buy-in from the executives. It makes sure that your communication plan is continually optimized. We will look at some of the benefits of developing corporate communication skills. One of which is enhanced leadership. Can you hear me, please? Hello, can you hear me? Okay, it's fine. So one of the key benefits of having developing a corporate communication skill is enhanced leadership. As a leader, when you have a good communication skill, it sells you a lot. It helps you to be on top of your game, be on top of your work at all times, so that it will be able to enhance your delivery of your services, of your work, so efficiently at all times. So it's one of the key things that we'll look at as benefits. Then the next one is improved teamwork and productivity. Improved teamwork and productivity, strong communication fosters collaboration, and it reduces conflicts and also encourage a culture of open dialogue that will lead to cohesion and productive team and reducing misunderstanding and inefficiency in the workplace. So it improves your teamwork and productivity. The next is better decision making, effective communication at all times in a corporate setting it ensures that crucial information is available and information with informed decision making. It helps at all time to keep you at a strategic workspace at all time. So the next one is enhanced problem solving and conflict resolution. Enhanced problem solving and conflict resolution. It helps you to aid you to identify and addressing problems quickly and effectively, preventing issues from escalating. You shouldn't wait when issues, at the peak of it before you start escalating what has to be done. So, in having if you develop a good corporate communication skill, is going to go a long way to solve your problem and have issues and conflict resolved all time. The next one is brand image and customer satisfaction. Effective communication, helps you to have customers communication that build trust and loyalty that will lead to higher customer satisfaction and roles, and that will bring about repeated businesses. When you have a good corporate communication skill, it helps you to maintain your customer, you serve them, and that will also in turn bring repeat businesses, and the revenue will come in to the coffers of the entity where you are. Then we look at career advancement. Effective communicator, are sought after for leadership and managerial roles at all time. Once you advance your career as a good as a professional, it helps you to upskill yourself in a corporate setting, and it helps you to be at top at the leadership or managerial roles at all times. We also look at innovation and adaptability, which also talks about the a culture that has to be drive by a professional to foster innovation and also make employees feel more comfortable sharing creative ideas and solutions. They can also adapt their style to various situations and audience, making them more versatile in diverse environments. Organizational success also talk about the workforce skills in corporate that benefit from improved internal cohesion and external reputation and overall successes. Personal growth also is another benefit that can be derived from a corporate communication skill. It leads to personal growth and increased self-confidence, benefiting individuals inside and outside the workspace. So we'll look at the tips, 3 tips for impactful corporate communication, which ranges from clarity and simplicity. Ensure messages are clear, concise, and easily, understood. It helps you once you avoid jargons, once you avoid unclear languages used, it will help you to convey your point effectively to your listeners, both the internal and external stakeholders. Then we look at audience-centric approach, which talks about the change in communication to your target audience needs, that interest and preference, understand their perspective, and address their concern to make messages more relevant. Then the next is consistency, which maintains a consistent tone and messaging across all communication channels. This consistency helps reinforce your brand identity and message, building trust with your audience. Then we look at the corporate and normal communication that we'll rarely see in most cases out there. We'll look at the one as in terms of context. Corporate relations skills are tailored specifically to communication within a professional or business setting. They encompass interaction within an organization with clients, stakeholders, and during some formal presentation or negotiation. Everyday communication these days, however, are used in personnel, in informal and social context. They cover interaction with friends, families, acquaintances, and usual conversation. While we look at the formality, we'll look at corporate skills. Typically require a higher level of formality, professionalism, and adherence to established communication norms. Such addressing colleagues by their title and using formal languages and written communication is very, very key. Then in comparison, we look at everyday communication skills tend to be more casual and relaxed with language and tone tailored to the familiarity of the relationship between the workforce. And that bring about another aspect of variance. We are looking at purpose. The communication skill primarily serve as organizational goal, including conveying information, making business decision, building professional, relationship, and achieving business objective. On the other hand, we look at normal communication skill serve various personal and social purposes, such as a building of friendship, expressing emotion, sharing experiences, and maintaining personal relationship. Then we also look at channels. What are the channels that we adopt? Include formal documents, emails, presentations, meetings, and often require familiarity with digital tools for professional communication. When we look at the normal skill that we have, we talk about face-to-face conversation, phone calls, text message, and social media for personal communication. These are some of the channels that are out there that professionals use both in the workspace and to the public space. This helps to be able to, relate with to the third party professionally and enhance and also put you at the top of their skill as a great communicator. We'll look at the audience, which is the key. They have a diverse audience, both your colleagues, their superiors, their clients, the stakeholders, requiring this adaptability to different communication styles is one of the key needs that we should or professionals should be able to, have. And in looking at it vis-a-vis the normal communication, we look at it from the perspective of personal contact, which communication style may be more consistent and familiar, which at all times, when you are interacting with your audience, you should be able to identify the aspects of way for you to communicate to your audience that will maintain your professionalism and keep your key communication skill at the top of it. That will go a long way to communicate to the third party, to the stakeholders, the kind of person you are and how you represent your entity, where you are working or running your business. It goes a long way. The accountability as a communication skill vis-a-vis the as per corporate. We look at it as a high level of accountability as professional communication can affect an organization reputation, performance, and success. Normal communication skills at all times generally more forgiving for few consequences. We'll go ahead to look at communication with your clients. You initiate communication with a client should at all time begin with a warm and professional introduction. You don't need to, interact with your clients whereby you are going by on a harsh tone and also, addressing them on the manner that when they remember the initial contact they have with you, they will at some point when you call them on phone or try to reach them or try to get to their offices to discuss, they'll be giving you attitude that can emanate from the first contact you have had from by meeting such a person. So when you have initiate a communication with a client or a prospect or your colleagues in such a way that they have a warm welcome with you at all times, you see them coming, to want to get more from you. So when you're addressing them respectively using their title, last name, unless you have more informal relationship with them, you can then greet them with friendly manner and with courtesy tone. That goes a long way to ensure that your clients will feel at home in relating with you. It's those things, all these little things at most times, it shows their courtesy and professionalism and it sets a tone for a positive and productive client interaction. Effective communication with clients and colleagues. While interacting with clients, make an effort to understand their needs, ask clarifying questions, provide relevant information and solution, set clear expectations regarding deliverables and timelines. With colleagues, we foster a collaborative and respectful atmosphere by sharing information, offering constructive feedback, and acknowledge their contribution. When you are interacting with you in your workspace, make sure that you carry everyone along. You being at the top as professional or at the manager level, you should ensure that your subordinates are at all time understanding the vision you want to achieve, the target you want to achieve. Communicate with them, collaborate with them, understand even their challenges. You need to bring them home. So when you understand their subordinate challenges or their needs and all that, and give them a leverage on how to address such challenges, it helps them to try to makes you even achieving the goal, the major goal of a course of action that we want to achieve in the workspace. So when we look at some basic elements of communication, we have the sender, which is the initiator or the coder of the message. We look at the message itself, the idea, the thought, the speech, the symbol, the sign, the gesture, etc. All of them can be verbal or non-verbal. The encoding, which talks about the process of transformation of the intended idea. Then we look at the channel, the mode and medium through which the messages flows to the receiver. The receiver itself, the person to whom the message is intended to, must be active. Some of these things you should be able to make it make the listener, the receiver, to have a listening ear. You can possibly repeat the message that he receives to ensure that he gets the message well. When he gets the message, the decoding now talks about interpreting the underlining meaning of those messages by the receiver effectively. When you get that, that will take you to the feedback. This is the end of the communication as it is the response of the receiver. Once that is done, you have put down the communication skills you have placed around your interaction with both the clients, the colleagues you have in the office, and the external personnel or stakeholders. It helps a long way to make sure that your goals are being achieved. We also look at some effective communication skills, we think we mentioned some of these things: active listening and understanding, use of right medium, clarity and factual, non-verbal cues, self-confidence, empathy, respectful and friendly, volume and tone, responsiveness and sharing feedback. Some of the barriers we have in effective communication can come as regards to interpersonal barriers. It can come as language barriers, cultural barriers, gender barriers, perceptual barriers, emotional barriers, and physical barriers. All these are some of the things that can come in to be as a barrier for you to be able to communicate, and we hope for you to escape some of these barriers. Sure that at all times when you are developing a communication, you need to pass down to the third party. Ensure their own skill, that you yourself, what you want to communicate, you have that understanding of it, and the people you are communicating to also have their listening ear for your communication. That will help you to develop or and meet the goal that you want to achieve. So looking at some aspects of report writing, workplace, it's at all times it's recommended that you check from your workplace at least before you pass off your report. They're trying to
Wow. I think we've lost Prince again. Hopefully, and is in his towards the tail end of his presentation actually, because he ought to have rounded up by 1:15. But now that we have lost him, we will naturally transit to question and answer. If he's able to join us again, he can have his concluding thoughts.
Okay, I want to respond to a question.
And I can see Dr. Von has done justice to most of the questions we have on the chat box.
I have a clarification.
Okay, please go ahead, ma'am.
Okay. For the limit of a small company, it's under general interpretation. It's not directly under company income tax. It's 50 million threshold or less, or a fixed asset that does not exceed 250 million. So those two clauses must work hand in hand. Must not exceed 250 million, your fixed asset, and must be earning gross turnover is less than 50 million. Then for the one for VAT, it's not explicitly stated that a small company, blah, blah, blah. But since it's under general interpretations, it means anything called small company must be 50 million or less. Because in the VAT, value-added tax, chapter 6, and exemption from value-added tax, they just explain what is exempted and what is 0%, but there is no place they stated a small company for 50 million for VAT. It's not stated. So maybe it has to come in a circular or something, but it's not stated. But the general small company is 50 million. You cannot work based on assumption that a small company of 50 million will not remit VAT, but that needs to be clarified from the Nigerian Revenue Service.
Yes, I think Madam Ogechi Odia, yeah, Dr. Bond is confirming that it's 50 million, not 100 million. And that's why she's trying to do some clarifications. Prince, I can see you are back. How many more slides do you have? Because I thought you are about rounding up. Based on the time slot we have given to you, you can unmute, Prince. Prince, are you there? You can unmute yourself.
Okay. Sorry for that. Network has been so friendly.
Yeah.
So I think you have less than 4 slides to slide.
You need to finalize?
I think that can go for like 5 minutes. I'll be done.
Okay.
I think we'll have less than 5 slides to round up.
So we'll stop you at 120 then.
Okay, that's fine. Okay.
Thank you.
So
go ahead.
Yeah. So question here, who is a great communicator? Is somebody that shares real personal stories that helps their audience communicate with the message, takes the time to learn about the audience before he speaks to them. He always provides something of value for his audience. He does not take shortcuts. He greets all people before the presentation begins. He does not always say or some of these filler words when they speak, which generally out there we call it verbal virus. Some of these things are what is to be avoided. Then that increases this person's vocabulary. Then we'll look at common mistakes that can be also seen in report writing, which include everything. When doing that, including everything you know about or a topic or an issue against essential information to the purpose of the report. That's some of the mistakes. But for us to achieve that common mistake, to break that common mistake, you need to identify the essential information that you need. And that is what is to be incorporated in that report writing to make it more factual. Then including also substantial facts and emotional assertion against being objective. We also one of the mistakes that's mostly seen in the workspace or report writing. So assuming everybody will think like you are. You don't, in writing report, don't assume that everybody will think like you yourself. Some control process to arrive at a good report writing, which includes get a proper brief. The next one is think about the audience. Next is work out your desired outcome. Structure the report carefully. Make sure that it has a beginning, middle, and an end. Find and organize, analyze the information you want to include. That will exclude everything you do not need. And review your reports. If possible, ask someone else to prepare it. It helps you at a long time to, have your reports in good shape. Then in conclusion, we are saying that communication skills are the bedrock of successful organization. They facilitate clear, transparent, empathic interaction with both internal and external teams and external stakeholders. Effective communication skills enhance teamwork, strengthens brand reputation, supports strategic goals. Remember, communication is not just about words. It's about fostering understanding, collaboration, positive relationship, and outside organization. So some of these are the corporate communication skills that a professional should be able to interact with or have at a workplace, interacting with his clients, interacting with the stakeholders at large, even the colleagues in office. It helps you to build their confidence. It helps you to maintain their stand. It helps you to drive their goal at a later end. So with this little presentation, I should believe that we have again one or two things coupled to what we have, and at a long run. So we're saying thank you very much for this opportunity given to me to be in this seminar. Thank you.
Thank you, Prince. We really appreciate your time, despite the network glitches that marked some aspects of the presentation. Participants, can we show Prince some love through the use of the various emoji signs in appreciating him? Thank you to those that are already sharing. For sharing his perspective on the soft skill in communication within the corporate environment. So we apologize for the various technical glitches. And as you might have noticed, we've started admitting, we've managed to resolve the 100 cap limit that prevented some participants from joining the session earlier. But you all be rest assured that all paid participants will be sent the slides as well as the recordings of this session. So for whatever you might have lost, the recordings will be there for you to catch up on them. We will now use this time to attend to questions that have not been attended to on the chat. So if any of us have specific questions, we have slot for 5 voice questions. Let's signify that with the use of a raise of hands, and I will call us out to attend to those questions. So questions within the next 5 minutes, 15 minutes, and we will have maximum of 5 speakers to attend to those questions. Do we have any? I'm still running through the chat room. Okay, I've seen Mrs. Miriam Opoedu. I hope I didn't murder it this time around. Raises her hands again. Do we have any other question? Any other hands outside us? So at least let's know the total number we are accommodating now. Okay. I have another. Madam Miriam.
Okay. Thank you so much, Michael. Okay, I dropped my question on the chat box, but since you have given opportunity for
Is that been attended to yet?
No, sir. So you just gave opportunity for a voice question. So that's why I raised my hand.
Go
So my
ahead.
question is that I didn't hear mention of WHT. Does it mean that WHT was not factored into the Nigerian Tax Reform Act?
Who is that question directed to? Is it Dr. Vaughn?
It came out
Yes.
on its own. Withholding regulation 2024. So that act came on its own standalone, which took effect from this year. So it's already in operation. That's why it wasn't mentioned, because it's already in operation in Nigeria.
Oh, all right. So, just like my understanding is that the essence of the Nigerian
They
Tax
always
Act.
refer to it in this act. You say based on
Say
to
again.
consolidate, but
Say again, please.
yeah, I get what you're saying. The act
Yeah.
is to consolidate. So what they did is that anytime they want to refer to the withholding, however, they actually brought it in as a session, like a repetition, so that we know it's one compendium. So they always refer to it based on the withholding regulation schedule. So they were referring to it, but they didn't bring the act itself inside it.
Oh, all right.
And if I may add, Dr. Vaughn, I think the new Tax Act, it spells out the various taxes it was replacing. Withholding tax is not included.
Not there.
So which means, back to your point, because we have one that is subsisting, there is no need to more or less like make reference to it in that new act. Okay, Prince Ihendu, you can ask your questions now.
Yeah, good afternoon. I have two questions. I'm very brief. Please, Doc, I just need more clarity on effective tax rate because while discussing it, I was hearing effective tax rate and minimum tax rate, the 15% and the 0%, just to put it in proper perspective for me. Just I need more understanding on that. Then for Dr. Prince, I also have those questions. How do you handle difficult customers while communicating? Don't know if my questions were gotten.
Yeah, they were gotten. I think Dr. Vaughn will attend to hers first, then Prince will come in, with your own question. Can I take the indulgence to take all the questions? So we've taken two. I have another raised hand. Dr. Vaughn, kindly note the questions addressed to you as well as Prince. So let me take the question from Mr. Solomon Simeon. You can unmute to ask your question. Mr. Simeon, kindly unmute to ask your question. Can you speak? We can't hear you. You are not audible in case you are speaking. Mr. Simeon. Okay, Dr. Bone, I think you can go ahead with response to...
Good afternoon, sir. Can you hear me?
Okay.
Hello, sir. Can you hear me? Sorry. Okay, thank you so much. My question is to the doctor. Please, can you assist us on any part of the Tax Act that talks about donation? Thank you.
Dr. Vaughn, did you understand the question from Mr. Simeon?
Yes, please.
Hello, ma'am. Did you get the question from Mr. Simeon? Okay. So you can go ahead and respond to the question. I think that's the last question.
Okay. The name is called minimum effective tax rate. So that's the full name. So it's not minimum tax rate, then effective tax rate. The full word is minimum effective tax rate. So it is 15%. There has always been a discussion on global minimum tax. which has always been 50% globally, whereby the tax I'm being charged in Nigeria will be the same tax I'm being charged in maybe Uganda, in UK, based on MNEs or multinationals that have subsidiaries in different countries. It's not for local companies within the system in Nigeria. It's for multinationals. And those multinationals must have a gross annual turnover of 20 billion. So if you are in that space, you have to calculate an effective tax rate. So how to calculate effective tax rate is the tax you have said you have paid over the profit times 100 over 1. Now they are saying this profit is net profit, and not just net profit. You're going to deduct 5% of depreciation and your personnel cost for the year to get this net profit you are dividing with tax. When you get it, if you get 13%, your Nigerian arm will pay the remaining 2% as supposed to have been paid. So that's why companies have to do a forecast to see what their effective tax rate is, so that they ensure that it's 15% and they're able to follow the laws of the country. Section 164. I hope I've been able to answer your question.
Yeah, go ahead, ma'am.
164. So in the Tax Act, the Nigerian Tax Act, Chapter 8 is basically, so they moved all the incentives. They were not putting it part by part. They moved everything to Chapter 8, tax incentives. So 164 has income tax exemption. 165 is deductible donations. 166 is R&D. So there are three there: income tax exemption, Part 1, Chapter 8, tax incentives. That's where you get the list of deductible donation from the Nigerian Tax Act 2025.
Thank you, ma'am. Prince, so the question addressed to you, can you attend to it? So, Mr. Simeon.
Okay, I think the question was centering on handling difficult customers when communicating.
Yeah.
I did. We know in the climate in Nigeria, even with the issues on ground, the economic meltdown and all that, everyone is being put on the frustration mode. But one thing as a professional in handling those kind of customers, you need to stay calm and composed. Keep your tone professionally and calm. You don't need to, be at the same level as when the person is communicating to you difficultly. You also listen actively, understand the customer's concern fully before responding. Don't just take your own stand and make sure that you want to force your stand to him. When a customer comes, he has a need, he has a challenge, there's something he needs you to address. So you need to listen to such a person actively. Then empathize with him, show him that you understand his frustration and issue. When you show that, you focus on that solution. How do I come around, to resolving such issues that is the customer want to or arguing with you? So make your own clear communication. Use your clear communication and concise. In as much as you're setting your boundaries, you have to be polite. If need be, explain your policies and your limitations politely, not enforcing it on them. So when you acknowledge this, acknowledge their feelings, you understand what makes them to be upset. You put the clarity to the question they are asking or what that thing that is making them seems to be difficult to go by. Then if there is need or issue, maybe along line you are having a discussion with them that you mistakenly step out your boundaries, you should be able to find a way to apologize with them appropriately. And for any inconveniences they have, had with you, show them that apology, show willingness to help. That goes a long way to manage that customer that it seems to be difficult in a way that at the end of the day, you see such a person returning back to you to, do more business with you. Thank you. I hope I have to address such also your question.
Thank you, sir, for your perspective and response to that. And I'm sure participants have heard you and probably more or less like take it into cognizance. We've now run out of our question and answer session. In bringing this technical session to conclusion, I noticed there are some questions, that the facilitators have been responding to in the chat room. Like we mentioned, the recordings as well as the slides will be shared with us, and we'll probably be able to catch up with all the questions that are there. The question on the invoicing, I can bet you, even when you have a whole day to run through invoicing, it's a huge project on its own that one technical section will not be able to accommodate. But as I mentioned in the response, the district will look into it and possibly have one of their future technical sections address e-invoicing for our participants. Thank you once again. We'll now move on to the concluding section of the agenda, which has to do with closing remarks, both from our partner, One Team Social Club of Nigeria, as well as the Technical Secretary of the district, Mr. Balogun Isiaka, who both have 5 minutes to address us. Mr. Nambiuti, over to you for your closing remarks and brief on what OTSCN stands for.
Well, good. Thank you so much for the privilege given to us to anchor this event on behalf along with ICAN Amuwo and the Society. One Team Social Club of Nigeria is a social club for ICAN members. Okay, it's a place where it's our playground where we reason together to make life less stressful for each other. So we'll be talking about, it's only meant for ICAN members. So the door is wide open for all ICAN members. So we'll be promoting all ICAN initiatives. For instance, you can see that we are partnering with ICAN Amuwo and District Society to promote this. We are going to partner with all district societies nationwide, even abroad, to promote the ICAN brand. We'll be partnering with SWAN. We'll be partnering with Catch Them Young from all the district societies together with ICAN. We will partner in promoting every single ICAN policies. And then our members too, we will be looking at members' welfare in terms of health, financial growth, networking, collaboration, capacity building. So if there's any ICAN member somewhere who is going through financial stress, health-wise stress, you might need to send in their details. Our welfare team will reach out to them through their district society. Please encourage everybody to register with a district society, because we will be promoting the ICAN templates. So when you register in the society, we can authenticate who you are and we can reach out to you. When you pay your ICAN subscription as well, we will be able to identify with you. So that is, we will be having a group life insurance policies and so many other interesting initiatives within our little prayer group called One Team Social Club. So every member, so long as you are FCA, ACA, you have a space here to play and to mingle. So thank you so much for the opportunity, and thank you, Dr. Yvonne. Dr. Yvonne happens to be our chairperson in charge of knowledge and sharing committee of One Team Social Club. You can see that she's doing excellent job, and behind her we have a team of other professionals, members of ICAN, who are also giving her the support and giving the team support. Together we can build ICAN brand to a new level. The Akintola Williams and Co have done their bit and they've passed on the baton to us. So let us continue to promote the brand for good. Thank you so much. And for every glitch that we observe, we've noted them, and we're going to compensate by sending you the videos to everyone. And we know that members of the Institute are here to monitor our performance. We also assure everyone that quality will continue to increase. We will also send the slide. So we'll be expecting it later this evening by God's grace. And so that together we can fix all the stitch all the gaps that have been identified, and so that subsequent ones will be very good. Thank you so much. And over to my Oga at the top, the ICAN Amuwo. Thank you.
Thank you, Mr. Uti, for that comforting words. Most appreciated. Now we hand over to the Technical Secretary of the District, Mr. Balogun Isiaka, for his closing remarks as well as information about Amuwo District to our participants. You can unmute now, sir.
Okay.
Over to you. Oh.
Okay. Good morning. Good afternoon, everybody. Good afternoon. I hope you can hear me.
Yes, we can hear you. Go ahead, sir.
Yeah. Thank you, everybody, for participating with us. First of all, apologize to every member for any problem that might have happened at the beginning because people were calling from different ends. We are sorry for that. We thank everybody for participating in us. May Almighty Allah guide everyone, replenish our pulse for us to be in good health. When else we are calling you to join Amuwo and this society, we implore you to join us. Our district is opening for everybody. We had our meeting every second Saturday of every month at Lagos State University Technology and Solo every month. So we invite you to join us. And our webinar will be continuing like this, more educative. We are ready to provide more educative program for every one of you. Our member can join us home and abroad, can be a member. We appreciate people that are coming from far and near that join us. We thank you all. We pray for you, for God guidance, and for us to replenish more and provide for us and let us do well. As a child accountant, we're expected to be the leader of the world. So thank you once again. And on behalf of my chairman and everybody, we still appeal to forgive us any problem that happened during this program. So thank you all. Thank you very much. I appreciate you all. For everybody, my team, I thank you. Bye-bye to everybody. Thank you. Yeah.
Thank you, Mr. Balogun, for that comforting words. And on that note, I think we've come to the end of the technical session for August from ICAN Amuwo and District Society in partnership with One Team Social Club of Nigeria. To have brought these two powerful speakers, to our attention. The rest assured that the slides and the recordings will be shared to all paid participants. Also, your credit hours will be credited to your account within the shortest possible time. And just watch out for all our social media handles where you will get details as it relates to ICAN Amuwo and this society program. The One Team Social Club have shared their WhatsApp platform for any of us that are interested in joining. We can hook up with them and then follow up with other deliberations that happens on there. From me, my thanks to Amuwo and District Society for giving me the platform to moderate, and engage with our participants. And see you some other time. We'll now close with the ICAN anthem and the Nigerian anthem.
where you see it. You did one inside the maybe mark or it last. Someone around mark or it.
It's clear.
We're sorry. Thank you, everybody.
Hey. Which one is it? That's, yeah. You sit down and save me headaches.